Hello traders and investors. The markets just gave a strong move to the downside. In this video, I will be going over what I am looking for to justify an entry into the semiconductor index SOXL. I will also have a small list of stocks I will be watching for swing trades. Please remember, nothing I mention is a trade recommendation. I make these videos for educational purposes only. I am a retail trader, not a professional fund manager or advisor. However, I have been trading stocks and ETFs as supplemental income since 2016. This is not fun money for me, and I treat my trading like a business. I trade on several accounts, and I do not consider them investment accounts. I also want to make it clear, I am still bullish on my long-term investment accounts. My trading accounts grow on short-term trading profit alone. Since I use this money for income, I need a portion of it to remain liquid. That's why I choose this trading style. Before I talk about the market's recent slide, I want to give you my insight on the GameStop phenomenon and a possible contribution to the frenzy I have not heard anyone talk about. That is the January effect. The January effect is a perceived stock market theory which is said to occur in bull markets. This is when investors sell gains in large cap stocks during January to pay for capital gains taxes and speculate on smaller cap stocks that are underperforming for fast profit. Personally, I made $285 on NAKD, Naked Brands, and $222 on BlackBerry, or BB. And I took a $37 loss on NOK, or Nokia. I believe the bullish moves of the small cap stocks will fade due to the broker restrictions. This event was likely driven higher by social media and general media. The divisive current political and economic environment may amplify this correction on larger indexes composed of these larger cap stocks being sold off. For this reason, I currently have no positions in my trading accounts. I will, however, look for opportunities to re-enter when I see an opportunity where I can mitigate risk. First, let's talk about the semiconductor index. Since the major indexes tend to move in sympathy with one another due to overall economic sentiment, I will be focusing on the semiconductor sector. For me, it provides the ideal volatility and price range, specifically the triple leverage ETF, SOXL. I will be talking less on the fundamentals and speculations behind what drives this computer chip tech sector and more on the price action. Price action will ultimately give me a clear picture of when to enter a trade. On the short term, SOXS, the SOXL inverse, is in play. SOXS ETF moves in the opposite direction of SOXL, looking to move 3 times the daily percentage of the index it follows in reverse, SOXX. SOXX goes down 9% for the day, then SOXS will move 27% up. However, the lowest risk entry when SOXX or SOXL was when it peaked on January 21st. Let's take a closer look at the 1-hour chart. First, I'll talk about SOXX, the ETF that SOXL follows. Here you can see on the 27th, we had a gap down overnight, which is showing a strong move down. Now this price channel, or the standard error channel I use, can identify buying areas. Now this could be a lower risk buying area, obviously, than buying up here near the top. The only problem is this trend has not confirmed to have reversed. How I confirm when a trend has reversed is by drawing a trend line. Although my standard error channel study identifies low-risk buying areas, I like to confirm the new uptrend first. I do this by clicking on my draw tool. I'll demonstrate this on this previous tip. What I do is I right-click, select Add a Drawing, left-click, and it will give me a point where I selected at. Then I left click again, and that'll drop the line down. Now you can see where the trend has reversed. This will give you a confirmation that there is a move up. You can do this from peak to trough and just follow the trend. Here's one, or you can consider this one another move to the upside. And what I am looking for to give me a confirmation on the uptrend is a break of this trend line. Currently, I identify a stronger move to the downside. Until this trend line breaks here, then I'll have confirmation that the move has started to move to the upside. I can also use these areas where price touches upper resistance to enter on an inverse trade using SOXS. Because SOXS mirrors SOXL in the opposite direction or inverse, here you can see that same peak is now a bottom, and you could have entered a trade here if you want to take the risk to the downside. But as mentioned before, the lower risk areas to enter such a trade would have been on January 21st, here at this peak. Now I know that's easier to calculate in hindsight, but let me show you the opposite method you can identify the end of an upward trend. We can draw a support trend line where the trend tends to fail. In this case, it was this 50 moving average on the 1 hour chart was holding support. You can see where it tested support here, popped up once again, and then broke through support. This would have been on January 25th, where it finally broke support and started to the downside. If you look at the daily chart, you'll see that we're due for a strong correction. Now keep in mind, if SOXX drops further, SOXL will dramatically move down exponentially because it is a triple leverage ETF. If we have another 30% correction, this could easily go down to about $100. Now that being said, that will also offer a lot of value and upside if you can time it correctly. A couple other ticker symbols I'll be watching are RIDE and CCIV. Since there's been support expressed through an executive order by the current presidential administration, the EV market is likely to have some upside. Now, if something happens politically, this could fall through. So I'm being cautious about this, but I do know that there's also a potential for a good move. The other ticker symbol I'm watching traded on hype is also an EV play, that's CCIV. CCIV is a SPAC that is currently rumored to merger with Lucid Motors. As you can see, I've been trading this in and out on day trades, and it's currently still just hype. Because of that, I'm still being cautious with it. Remember, this is only my personal opinion. Please do your own due diligence. Manage your own risk how you see fit. With that being said, I wish you the best in your trading. That completes this video. If you found this video helpful, please click the like button. Please subscribe if you haven't already and select the notifications bell. I'll be posting stock charts I am watching monthly. I also want to hear the stocks that you're watching. Please post your plays in the video description. Thanks for watching.